I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hello, Jim.
Are we going green enough?
Haha, no, not even close. But I would say that there's the most exciting innovation everywhere in all levels of different sectors and society and the world in general today than there's ever been. So I think that we're at a tipping point. I was just talking about this with my partner. I think we're really at a tipping point. I think that it's coming of self-interest in reducing expenses because people are struggling with flat wages and low yields to pay for their life. So there's a huge self-interest in lowering one's living expenses today, and I think that's where the consumer push is coming from. But at the same time, companies are starting to see that there's huge growth and profit potential in these new technologies. And so when you get those two forces coming together, let's face it, government is led by the demand of its people and companies. So once you get both of those sectors or segments of the populace pushing for innovation and adaptation of new technologies in, whether it's sustainable energy, efficiency products, all these different things that we're using, the food industry, all of it, you have a massive shift in human behavior. And I think that, that's critical. There's just so many exciting things going on. I don't know if you caught the rollout of the Tesla solar shingles on October 29th, so just at the end of last week. This is one example of something where you've got this now vertical integration, right? You've got these stunning shingles that are far superior to existing types of shingles that look gorgeous, that are stronger, that will last longer, that are incredibly efficient in capturing the sun. And then you have the Powerwall, which was released about the same time, which is now double. This new iteration of the Powerwall has double the power capacity of the first iteration, which came out about just over a year ago. And then you have, of course, the electric car phenomenon, which is sweeping the world thanks to the leadership of Elon Musk. But the rest of the car companies were very slow in the turn of that, but now they're being embarrassed into it. And consumers are saying, to these so-called top automakers in the world, where's your product, guys? Like, we need an electric product. Where is it? And so you get countries like Germany who have led the revolution in terms of all the leading-edge technology in auto for the last, 100 years and more, now Parliament voting that they should not be able to sell anything but non-combustion engine cars by 2030. So it is literally all around us. And then there's some awesome documentaries that have come out to reveal the severity of the issue, along with, as I say, all these things that individuals can do. I think there's this tendency sometimes to feel like it's overwhelming, it's hopeless, what can I do? But ultimately, it's the consumers making these self-interested decisions for change in what they're doing with their behaviors, what they're eating, how they're driving, how they're getting their energy. That really is at the driving edge of this. And that's where I think the optimistic message is that for the first time in history, you have this penny dropping in the consumer and the corporations, and you have the technology to really make a dramatic difference.
Well, I've seen it here in my condo complex. We used to have 3 of those big Smith Wright garbage containers. We're down to 1, and everything else is put into recycling. Glass, plastic, soft plastic, styrofoam, you name it. Everything is recycled.
So there's an interesting study I put on the blog, I think it was last week, on the behavior of recycling, and it's critical to understand that I think when we get it in our understanding that is wasting energy, literally throwing energy out, right? When we don't try and recycle the good back out of these products. I was seeing, somewhere this week, a pair of jeans represents 1,500 gallons of clean water, one pair of jeans. So when we're throwing these things out, the impacts, it's just such a waste of money. Again, once the populace comprehends what an incredible waste of money and resources it is to be tossing this stuff into landfills, another thought that really resonates and has stayed with me for a long time now is that everything we've ever had in our life, every ball or bike you had as a little boy, 50 years ago, is still on this planet somewhere. It's either buried in the dirt or it's been reused back into making something else. But there is no, the stuff does not leave Earth, right? It's all here with us. And once you get that idea, you think, oh, well, that's kind of disgusting. I don't want all my junk just buried in the dirt. I want it somehow reused and recycled so I don't have to feel guilty. I don't have to feel wasteful. And it's intelligent financially because it saves so much money. And I think that's where, again, we go back to what's the world desperately in need of today, because it's so encumbered with debt, because we have to, we've brought forward all this ability to consume for the future and spent it already through our acquisition of things on credit. Now what we need is increased efficiency, right? To be extraordinarily efficient with the resources that we have. And that really feeds into this whole thing about reduce, reuse, recycle. One of the caveats about that, and that came out in this study about the behavior of recycling, is that there can be a tendency to waste more, or to use more, when we are thinking of, oh, well, I'll just recycle this. So I think we have to be careful that we don't just use more because we're feeling less guilty because we're recycling. All of it goes back to efficiency, making sure that we're not wasteful and foolish, frankly, and financially destructive in what we're doing. Because at the end of the day, it just defeats all of our purpose, which is to try and, get ahead and to have a better quality of life, to afford more. To have more time, more resources, more ability to do things. And that all goes back to this idea of efficiency. So I think once we all get that in our brain, that, efficiency is the goal, it really starts to shape our behavior and our activities and our choices.
Now, there's a couple of brothers who are financing anti-efficiency propaganda, and that would be the Koch brothers.
Sure, and they're not alone, but they're certainly one of the most preeminent examples of it in America today. It's been highly documented, much written about. There's a new documentary that I just put on the blog, The Doubt Machine Inside the Koch Brothers War on Climate Science. These people, I find it quite interesting that many fundamentalist religious types will reject the notion of climate change or human impact on climate change, and they will espouse themselves to be, Christian and God people, but they are allowing our earth or not trying to help our earth from being destroyed. And this is a prime example, right? This right-wing effort to not only they're self-serving and they're trying to make profits off their businesses, which are heavily focused on fossil fuels. So that's one thing, but that's not enough, right? They have to try and queer the public's understanding. They have to use their incredible resources to contort the understanding of the science in favor of their own business model. And they're doing, devastating harm to the planet and our viability of the future. So I think it's really quite evil in that sense. If you want to talk in terms of, good and evil, I would say that is an example of, money and influence being used for evil purposes.
Well, it seems to me most Republican candidates say, I'm no scientist, and then they come out with some kind of statement that even in the Bible flies in the face of the things that were said there.
Well, willful blindness, wishful thinking, I think in many cases people just have So I think there's many different things. I think sometimes people reject change because it creates anxiety and fear, right? They're afraid that what you're saying might be true, and that makes them very upset because it means that they're part of the problem, not part of the solution, and they feel helpless or hopeless. I think that's one of the reasons that people are often obstinately opposed to change. I think another reason is just fundamental financial interests, and you see that in the paying off lobbyist contributions to political representation, which something like 67% of America is represented by, federal candidates who don't believe in climate change, or say they don't. But when you follow the trail back, they've been the recipient of millions of dollars from the fossil fuel industry. So they've literally been bought. Now, whether they acknowledge that personally and say, I've been bought, or whether they, put that to the back of their mind and rationalize it some other way and, don't accept the truth about that fact, whatever, there's various ways we all rationalize our belief systems. But, I think that's the main reasons for why people have a hard time accepting information that's so readily obvious all around us.
Well, also, too, I have a hard time accepting information from the oil companies. They had a minor fire at a refinery somewhere in the eastern U.S., and we're told all of Canada is going to have a 5 cent a liter hike. Well, we don't get our gasoline in Vancouver from a refinery in Atlanta, for example, but we still have to pay the 5 cents extra. Why?
Yeah. Well, there's, we've gone through this incredibly complacent period where the fossil fuel was taken for granted, where prices went up in the credit bubble and enabled all this capacity, pipelines, all this sort of assumptions about the way the economy will continue to function. And I think that now all those things are up for review. You'll notice the price of oil has broken back down below $45 a barrel. Again, most of the assumptions for earnings expectations for 2017 are premised on a oil price of 55 and higher. So as this mean reversion happens, which was all sort of artificially supported the price in the past few months by this expectation that OPEC would come up with some kind of an agreement and, peak cap production or freeze production. But ironically, in October, of course, they were producing at the highest level ever in history. So in the meantime, although many of the members say they want to have this freeze, most of them are looking around the room saying, well, but not us, right? Not Nigeria, not Iraq, not Iran, not Russia, like all these main members, and they're saying, no, we want it in principle, but we don't want to change anything about what we're doing, and we desperately need the revenue. So you're seeing that price is starting to fade again. And I think, again, it goes back to we've never before in history had the huge Moore's Law doubling of capacity in all these green technologies at the same time that you have this glut of supply in the world. So not only is the world growth slowing today and demand growth slowing when it comes to fossil fuel, but you've got all these alternatives coming in at such a ferocious rate. This, as I say, vertical integration of your ability to take power off your roof, store it on your garage wall, power your house for free, and then drive your car out in the morning. I mean, this has never been available before in the way that it is today. And I think that that's a game changer for the fossil fuel industry. So it means, I say advantage in reading signs, right? You can either pretend this isn't happening and hope that it goes back to the good old days, or you can understand why it's happening and evolve your business models and behaviors and your economy accordingly. And that's certainly what we need to do in Canada, because we have the ability. I mean, Saudi Arabia's got this memo already. They already understand that probably sunlight will be their next big fuel business, where they have to capture and store and sell that back to the world. So it's just, I think the dinosaurs are an example. If you want to be a dinosaur, you go, you become extinct. If you want to evolve with humanity, which is never static, by the way, humanity is always evolving. The biosphere is always evolving, so we can evolve with it, and that is actually the nature of survival.
We'll have more with Danielle Park right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Danielle Park. Danielle, on your blog, Juggling Dynamite, you have an item on how high-frequency trading is stealing wealth from the rest of the world.
Yeah, so there's another chapter that will be written in historically we'll look back and say, how could, that was just such an obvious skimming, illegal activity. How was it allowed to go on for so long? And that particular story is, there's regulatory pressure coming in places like North America because people are starting to catch on, because you have the rise of, the new exchange where they're slowing the speed of quotes to try and foil the efforts of these HFTs. The Michael Lewis book that was written about the Flash Boys, well, that exchange is now available, and you're seeing, again, people shifting in a self-interested way. Legitimate participants in financial markets are saying, I don't want to be used and abused in these regular markets that are selling my flow to these predators who are skimming, cents off every trade and making themselves hundreds of millions of dollars at the expense of stability and integrity in financial markets, which ultimately should be like utilities in support of the economy. And they've turned into these gambling casinos run by these, cowboys with unfair advantage, because they've paid off the sheriffs who are literally selling them this privileged access to the rest of us to use and abuse legitimate participants like pensions and other investors. So that's become more to the public awareness in the last few years, in part thanks to Michael Lewis's book and these things that have come into the news. But you're seeing this huge boom of this type of business in Asia. Because, again, they follow, typically the patterns of the West, and as soon as they start cracking down on this type of activity on this side of the world, you see the firms flocking to the next new frontier where they can, gouge and use and abuse. So I think what's happening is it's ultimately gutting the integrity of the financial system, of the free market system that, everyone points to as a major utility of capitalism, of the equitable distribution or the efficient distribution of capital from investors to businesses. That's being really undermined by the allowance of this illegal activity. It's ultimately illegal activity. It's front-running and something that for many years we've already considered to be fraudulent activity. And if we were to enforce the laws that have been on the books, the security fraud laws that have been there forever, this type of activity would never have been allowed to become such a, billion-dollar industry. But because, again, the enforcement and the would-be cops on the beat have all been bought and paid for by this industry, here we are, another example where free market forces are thwarted by self-interests who are paying off the cops. So I just think it's going to be, again, it's inevitable that it'll be quashed, that I think what will happen is that we will have to take back, create public exchanges which are truly utilities for only legitimate participants to take part in. And these exchanges who have made themselves into these, highways for this kind of HFT activity will have to go over here and sort of let each other trade against each other like war games. That's fine if you want to do that, but you're not going to do it in a predatory way over regular, legitimate traffic. And I think it's the separation of those two which will ultimately end the profitability of the practice, because the truth is that they need the slow-moving, dumb money, in their world. They look at the legitimate investor flows as dumb money, slow-moving capital. They need it to feed themselves. If we separate them off and make them drive on a separate highway, suddenly, they're just in some kind of a wild chicken fight to the death, and they ultimately will go out of business.
Should GlassSteagall be reinstated?
Absolutely. There's no question about it. We need to have that dividing off of the legitimate participants, and there was an article, the Wells Fargo story that we talked about how they were doing all these fraudulent activities driven by top-down sales targets from the C-suite, and taking advantage, predatory activities, all that, of their customers. Well, in fact, as I've said before, Wells Fargo is the poster child for this activity at this particular time, but it is actually the business model of the investment banking industry to take advantage of the trust of its customers. So whether that be in this selling their order flow, which many of them do, to these HFT firms to take advantage, or whether it be, cross-selling them credit and risk products that are full of fees for the bank but not in the best interest of the customer, that's actually the business model of the entire sector. So there's an article on RBC, Royal Bank of Canada bought LA City's National Bank. Otherwise, and they did it specifically because they wanted to adopt this Wells Fargo style cross-selling aggressively, and they style themselves as the Bank of the Stars, the LA City National Bank. So they were saying, well, we're not taking advantage of the mom and pops. We're focusing our cross-selling, deluge onto Hollywood and the entertainment business. So somehow that makes it, not repugnant, because we're taking advantage of rich people as opposed to poor people. And there's this precept that people are inherently more sophisticated if they have money, so they can, they ought to be able to look out for themselves. But the truth of the matter is that that's not so. Many people who come into money, whether it's in Hollywood or otherwise, have had very little experience with it growing up, or it's not their life discipline or field of expertise to know, how to manage their finances or what one does to keep capital safe. And so they're in a very vulnerable position when they go into their local bank and say, I've got this money, I want to put it in my bank and my bank account or in a GIC. And the first thing that the bank does is say, well, wait, that's very, you're much more sophisticated than that. Ergo, gullible, let me take you down the hall to our sales guy who's going to sell you a bunch of products that will make us fees and put your capital in harm's way. And that's why we need this division of the people who are going into banks and making deposits and, applying for a loan should be in one side that is completely parceled off and separate from the sales force, which is trying to pump products at capital at all times, at every day and every price, because the two are in a dramatic conflict of interest. And the problem with a bank in its traditional sense is that is where people take their savings to put it somewhere safe. That's their emphasis or reason or rationale and need, is a stable place to put one's savings. And then if there's investing to be done, they can decide, okay, I'm going to go over here to a different company who's not related to my deposit-taking institution and see if they can give me some advice on what products they want to give. At least you've got a sales culture then that's separated off. You're going to a sales culture if that's the kind of advice you want. Or you can go to an investment counsel firm like ours, which is not selling products, which is only about risk management. In the good old days, they were very sharply delineated separate services. So you knew that if you went to your bank, you were talking to your bank manager about deposits, GICs, and maybe a loan. If you went to your broker-dealer, you were talking to a salesman who had a bunch of products that were risk-filled that they made fees selling to you, and you knew that. And if you went to your investment counsel practice, they were like your lawyer or your doctor or your dentist. They were a professional who was working for you for a fee, not selling you stuff. And that's the important distinction we need to have always with these lines on the road. In the past 30 years, it all became mushed into a merger pot of, just a mosh pit. So everyone suffered because of it.
What's new on the fiduciary duty front?
Well, again, the latest, the Labor Department in the U.S. has been trying to bring in a fiduciary standard for many years now on anyone giving retirement income advice. And the obvious reason there is we have a public interest in making sure that people are saving appropriately for their later years, because if we don't, then we have a generation of people who are leaning heavily on social services or are just destitute in their later years. And it's not in society's best interest to have people arrive in their 60s and 70s, with no savings or having to work till they drop kind of thing. That's not, generally speaking, part of the dream of our society. So what they've done is they've tried to bring in this fiduciary duty rule to say if you're going to be giving people retirement advice, you have to make sure you're putting their best interest before your interest in profits. And of course, now that is marching very close to being the law of the land in the United States, the whole industry's in an uproar because they've been doing all sorts of heinously conflicted, obviously egregious, self-serving practices. And I just found it hilarious hilarious in a kind of a pathetic way, but I get all these bulletins and junk mail from the financial industry who's in panic mode saying, by the way, there's these 10 things that are considered no-nos if you're going to be giving retirement advice when this new rule comes in. They call them the fiduciary no-nos. And they go through these screens and tell, no cross-selling, no hidden commissions, no, abusing your client and making secret profits and just all this stuff that I say a child could tell you should be unethical or not considered fine if someone's coming to you for advice, and yet the industry is having to get these slide presentations together to explain to each other what's meant by, oh no, you can't be doing this anymore. And of course the article is all focused on, does this mean advisors are facing a pay cut? Well, yeah, because they haven't been advisors. They've been salespeople, self-interestedly, collecting commissions left and right. And now it's going to have to turn that to, no, you don't get to collect commissions. You get to give advice for a fee. And that's a whole other world where they have to get used to making less. And you're going to have a culling of the industry, which is great because it's become highly populated with unscrupulous salespeople, and we need to get that cut back down.
Danielle, any final thoughts for us before we wrap up the show?
Well, we're heading into the U.S. election on Tuesday, of course, and I think that there is going to, no matter what the outcome, I have a suspicion we're going to have a sustained period of quite a bit of angst and volatility. Whether we have a hung election outcome like we did in 2000 when you didn't know who the winner was for a while and it had to be ultimately, some kind of an impasse broken by the courts, or whether you have, either party not conceding the transition even if the other party wins. I have a feeling that the financial market volatility that began in earnest in 2015 is likely to increase in this period. And I think the Canadians in particular have to have their eyes wide open here. We've got a real estate market that's in contraction in many of the key areas because of the tightening that's going on with mortgage rules. We have a slowing economy, and we've got an oil that's once again weakening. So I think that there's a lot of risk right now, and I just want people to focus on paying down their debt, building up their savings, and keeping their market risk as low as possible, keeping liquidity high, just till we get through this next phase and we get some sort of stability back into some of these key areas and questions that remain.
Danielle, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her podcast, Not So Common Sense. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.